All right, hello everybody. You are with Investing Education Academy again for our podcast. You have Leon Noble and myself, Brent Simpson. We are the co-founders of Investing Education Academy. All right, everybody knows what we're up against with this administration. The Trump administration is, I don't even know what this agenda goes beyond just hurting a particular class. This is just hurting everybody except for the uber wealthy. Um, and even then, this is just makes no sense. So Leon and I, we were talking. We decided, you know what, we're just going to talk generally about money today because protecting your assets is a part of an important part of investing. Knowing what you're protecting your assets from is an important part of investing. So Leon, if you can give us your thoughts on what people should be protecting right now in this administration, then I'll give my thoughts on what people should be protecting themselves from in this administration. And if you have comments, questions out there, please post them. We will do our best to get back to you. But this is one of those things you definitely want to pay attention to.
Well, well, everyone should be protecting their assets from everything, because right now it's an avalanche of just bad, right? I mean, I just real quick, I saw an article yesterday saying how now I mean we're not trying to make this political, but we're just stating facts that a lot of the tech companies and tech executives that supported Trump for election are are not happy with the way things are going early. And the reason being is that it's hard to run a business when every day tariffs are on, tariffs are off, tariffs are on, tariffs are off. You're cutting thousands of people in the government, which then leads to 1,000 people being laid off in the private sector. So even people that support him are saying this is a bit chaotic, dude. Like we didn't necessarily vote for this. Having said that, all of us need to protect ourselves as well, right? So, I mean, people at the beginning of this year who had jobs no longer have jobs. Had no idea this was coming. It's been a total shock to everybody. I know people in my personal life that have lost their jobs. And now they're scrambling to realize, okay, crap, I got to figure out where's my money. What do I do? So basically, what we're saying is, we're not wishing that on anybody, but it's a higher probability in this administration that people could lose their jobs than any in the previous administration. So it's a good time now to take a holistic view of your finances, top to bottom: mortgages, car loans, student debts, portfolio, your stock portfolio, bond portfolio, retirement, everything, right? Everything. Because one, we just want to you want to have your ducks in a row. Again, we're only 2 months into this, and look, all the chaos has happened already. Who knows what's going to happen a year from now? So we need to make sure we have everything aligned and together in case something hits the fan really, really crazy. I mean, we've seen, right, a lot of us watching and listening to this now, we're all about the stock market, right? Stock market is down 10%. We could go down another 20, 30%. Who knows? Because we have no idea what's coming. So another thing you also want to check is your portfolio. Make sure you're out of a lot of speculative names. Brent and I are really advocating, if you're going to be in anything right now, if you're going to buy anything, make sure it's a large cap household names. If you're going to stay in tech, Microsoft, Amazon, Nvidia, things like that. I would stay away from anything that's centered around the consumer, because yesterday the consumer sentiment came out. It's at its worst. It's at the lows. It hasn't been this low in over 12 years. So the consumer right now is really worried about the economy, where things are going. They're expecting inflation to go higher into the future. So the consumer is just really, really perturbably stressed right now. So I'll stay away from anything consumer related. Also, anything that any companies that ship products into the U.S., maybe we'll stay with those too, because these tariffs, it's going to raise their costs, which are going to raise the price of goods here, and likely that's going to mean lower sales. So these are things you want to start looking at your definitely your portfolio, because we're down, like I said, we're down 10% right now, and we could go lower. So yeah, that's my kind of my spiel on it. Take a holistic assessment of your finances from top to bottom ASAP, because we have no idea what's coming.
No idea what's coming. I think that's the theme of this. Looking at where your money is, as it stands right now, we still do have the FDIC as it stands right now.
Because the reason he said that is because the Trump administration, one of their plans is to get rid of the FDIC. For those who don't know, the FDIC is the one who insures our money in banks up to $250,000.
So that means that a bank becomes insolvent, or there's some shenanigans that happens. FDIC kicks in as a government-based insurance to make sure you're made whole. If this administration gets its way, that goes away. In addition to it trying to get rid of the Consumer Protection Division, which has again protected consumers when companies there's fraudulent activity on credit cards or against your person or business. There's an issue with business, and Leon had a startling fact about how much money has been returned to consumers as a result of the Consumer Protection Division in the last, I think you said 15, 20 years or something.
Yeah, since they were created in after the great financial crisis in 08, 09, the Consumer Protection Agency, and again, we're not saying the name fully, but it's Consumer Protection something. They've returned over $20 billion to consumers from fraudulent activity that's happened to them. So they were a great resource for consumers. And as of right now, that's really not functioning. It's not necessarily gone, but the Trump administration has effectively gutted it.
So you got to think, if all of our protections are gone, what then? Like that, it really just opens us up to chaos. Like, and the recourse that we will have is little to none. So, protecting your assets right now is hugely important. Looking at your mortgage, where do you stand with your mortgage? Have you talked to your mortgage company? What happens if you're unable to pay? Are you in a position right now where maybe, not everybody's losing? Some people are making money in this environment. Are you in a position where you can probably pay off some debts faster, just so you don't get put into a position where you might lose your home? Is there a way for you to look at your credit cards? Do you need all your credit cards that you have? Do you need more? It depends on who you are. And maybe should you be moving your credit card funds into an equity line of credit, and or should you be moving, some of the credit card availability that you have into maybe a personal loan? I don't know. We're not trying to give you advice per person. We're simply saying you should be looking at these things as strategies to give yourself a very strong position in this current political environment, because it's really, that's what's driving all the chaos, is the political environment. I mean, the Trump administration just it is a tornado of chaos. And so where you are organized and or where you have gaps right now, you need to know. If you have the ability to stockpile funds, normally in most cases, the general rule of thumb is you want to have 3 to 6 months of expenses on hand. They say 3 months if you're married, because the assumption is one spouse should be working, so you'll have a little bit more time to recover. 6 months if you're individual, because the thought again is you don't have a spouse to kick in with their payments if something were to occur, so you want to have more money on hand. Personally, I would take all those numbers or both those numbers and double them. So if you're married, I would say you should have 6 months of expenses on hand, because and I know people who both parties have lost their jobs in this particular political environment. So, now you're talking about living off of reserves, and or unfortunately, some people are living off their retirement. And, these things are finite assets. Like at some point they will run out. So you want to make sure you have as much cushion as possible. And some people I know are living off loans. Those equity lines of credit that they had, they're using to pay regular bills. So make sure you understand what your opportunities are. Make sure you just SWOT analysis of right now. Strengths, weaknesses, opportunities, and threats. Like we should all take an entrepreneurial approach to our lives. Like, what are the strengths we're looking at right now? What are the weaknesses in our overall financial life? Where are the opportunities? Because there are still opportunities out there. There are 100% opportunities if you can find them. And where are the threats? Like if the credit protection agency is gone, you can, I think most private protection bureaus have their own policing of your credit that you can sign up for. It costs like $8. So, if you don't have any protections anywhere, maybe you want to get that right now. If you are looking at your mortgage, do you have mortgage insurance? Normally I'm not a big fan of insurances for things like mortgages, but it's a great time to have it. If you're looking at stockpiling money and you want to have a rate of return is guaranteed, you have the bond market, you have CDs, you have junk bonds. And if you're going to get a junk bond or a corporate bond, you really want to have it in one of those Fortune 500 companies just blue chip or nothing. I mean, right now I'm blue chip or nothing. And so if you are looking at getting a certificate deposit at a bank, I would look at a credit union. They normally have better rates. So essentially what we're saying is make sure you're smart with your money. Make sure you know where it is. And I know that sounds funny, but there are people, when I was a financial advisor, I would sit down with certain families. They left the job 20 years ago and never rolled over their 401k or 403b or whatever they had at that particular job. They just left it there. And at the time, they were always making money, so it was never really a big issue. And I'm not saying you're not making money now. We're just saying be smart and know the future. Things can change very fast. I mean, you look at USAID. This is an entire agency that showed up to work one day, and the next day the doors were locked. And so, in this particular political environment, you just don't know what will happen next. Protect your money, protect your assets, know what your brokerage accounts are. Are you with E-Trade? Are you with Fidelity? Right now, if you're with some of those like fly-by-night apps online and they're holding all your money, I wouldn't do it.
Especially crypto.
Like I absolutely would not. I would not be in some of these random apps that just popped up. I would go for a traditional institution that if for some reason something goes on, they're less likely to be hurt. They're less likely just to go away. If you are invested, heavily outside the country, just think about how quickly could you access your funds if the rules change for people who invest outside the country. What are the things you should consider ahead of time? So, I mean, these are thoughts Leon and I just wanted you to have. We wanted to just plant these seeds. We're not trying to, scare anybody. We want you to be prepared just in case. And this is one of those situations, if you're prepared and nothing happens, then great. If you're not prepared and something happens, then you're going to wish you were. We don't want anybody who's heard our voice to wish they were. At least they can say, we can go to sleep saying, we talked to you all about it. Hopefully you did something. If you need specifics or like if you need some more guidance, you can join IAA. You can reach out to Leon and I individually, and we'll do our best to give you the proper advice that, again, our thoughts, still do your research, but know your needs right now. Know what your needs going to be 6 months from now, a year from now. Because like Leon said, we're only 2.5 months in, and this is as chaotic as it's been.
Yeah.
So, Leo, any thoughts before we go?
Nah, that's it. Just again, do your research into your own finances. We always say do your research on your stocks. Take some of that time now to do research on into your own finances, top to bottom, mortgage, car loans, student loans, stock portfolio, bond portfolio, everything should be in that list because I just heard this morning that the Treasury Department is supposedly going to lay off half its employees. So again, these are we're not trying to be political. We have our opinions, yes, but these are facts. And some of you may work with the Treasury, some of you may not, some of you may have contract with the Treasury. So these are things that can ripple through the economy. We've already seen. So definitely do your homework into your own personal portfolios, top to bottom.
Yep. And thank you for being with us again. If you are like, this is a good time for me to become part of a community, we welcome you to become part of Investing Education Academy. You can go to ieanow.com or go to ieamembers.com. Again, we want to do our part to make sure that during the next however long, because it's not just going to be 4 years, that the chaos that is happening, we can be a voice of reason in that chaos. We look forward to seeing you all in the next podcast and look forward to reading your comments. Have a good day.